Hello, everybody. My name is Jacek Bartosiak. Welcome to Strategy and Future. With me is, of course, my colleague, my friend Albert Świdziński, Director of Analysis at Strategy and Future. And our guest today is long-awaited Louis Vincent Gave. Hello, Louis.
Jacek, Albert, great to catch up. How are you guys doing?
Yeah, okay.
Yeah,
That's
yeah,
plenty of
yeah.
questions to you in that respect, how we should be doing, not before long in the future. The situation on the market, situation in the world is really, very demanding in terms of trying to find understanding what's going on. And
You're in the geopolitical business. This is as good as it gets for you guys.
it is true. We have
Just,
epic times. That is true. That is true, And
lots to come. Let's
I was lucky
analyze.
enough to write a book that sort of predicted what is happening now. So yeah, everybody's asking me on the street, even the vegetable producer is asking me, and I have no idea, Louis, So that's the whole point.
Yeah.
But we've been carefully listening to everything you've been talking recently to different media, to different people. So maybe let's start with the following. So what do you think will be the outcome and the consequences of this 20th, the meeting of the Chinese Communist Party and the Xi Jinping consolidation of power, especially in terms of the financial and trade relationship with the United States?
Well, we can spend just an hour talking just about that. I think there's a lot to unpack. So look, the outcome is pretty simple. Xi Jinping has obviously cleared the deck of any political rival, and so it's we just have to conclude now that China has basically moved from management by committee, which is what it was really for the past 30 years or so, where you had a group of 7 or 9 guys, depending on which Politburo you were talking about, taking decisions together in a sort of collegiate manner to one man rule. Now, of course, I would say management by committee reduces the scope for potential mistakes, right? You're going to have guys around the room that say, well, hold on a second, maybe we need to claw back. Rule by one man increases the scope for mistakes. Arguably, as we've seen with the war in Ukraine, if maybe you'd had more management by committee in Russia, perhaps Putin wouldn't have invaded Ukraine. Who knows? With ifs, you can redo history. So anyway, so I think because of the sort of Putin precedent, the market is today looking at this shift in China from management by committee to one man rule and freaking out, thinking, oh, here we go. This is going to be just as bad as Russia. And so China is now completely uninvestable. So I've called it in the age of zero. We've gone from zero interest rates to zero COVID to zero carbon, and now it's zero China. You just can't have China in your portfolios. And so this morning you saw an absolute puke by foreigners of pretty much any China positions. Hong Kong was down back to its 2000 levels. So sort of 20 years of equity gains wiped out. I think last night in Hong Kong you had 2.5 billion of foreign selling. So for me, I look at it and I look at this, this Xi Jinping announcement and the removal of Hu Jintao. It feels like a bit of a cathartic moment where a lot of investors that were perhaps holding on, thinking, well, China's still important, assets are cheap, etc., are just giving up, and everybody's throwing in the towel and saying, I have to get out. Now, granted, to your point, what's scary about Xi Jinping monopolizing all this power is at the same time the relationship with the U.S. keeps on deteriorating. And you just mentioned the semiconductor tariffs, and now you have to think that China having been slapped with important tariffs, how does Xi Jinping respond to this? I actually think so far there's been no response, right? partly because Xi Jinping had to deal with the party congress, so he wasn't going to get distracted. There will be a response, but it doesn't need to happen today, right? There's Xi Jinping. There's no rush on him to respond. The obvious response is, of course, they're going to put more money in the semiconductor industry to build competitors. So if you're a Korean or Taiwanese or US or European semiconductor producer, you're thinking, this is great. Now there's going to be more subsidies to my Chinese competitors. So this isn't that great a news. But I think the obvious response, if you're Xi Jinping, is to now tell every company in China, make sure you don't depend on the US for anything. So let's say you're a car producer, and to produce a car, you need about $3,000 worth of chemical products in a car. And a lot of these chemical products are produced by DuPont or by Dow Chemical. Now you're telling every Chinese car producer, make sure you don't use US chemicals, because tomorrow they might ban that, right? If they ban semiconductors to today, who's to say they don't ban machine tools or ban chemical products or whatever else next? So now I think if you're the Chinese government, you're telling every Chinese producer, reduce your dependency on the US and on US intermediate products, intermediate goods, as much as humanly possible and as quickly as possible. So this will mean, I think, a further deterioration in US trade balance, further loss in productivity, and greater inflation. If today a Chinese producer uses, I don't know, Dow Chemical products, it's not because they like Dow Chemical, because Dow Chemical offers the best product at the best price. But now they're going to have to go for somebody else. They might go for BASF, who might be more expensive or not as efficient. But the reality is, or they may go for, more importantly, for a domestic producer who may be a lot less efficient. But so we're moving to a world where, with the increased government interference in industry after industry, you get lower productivity. Lower productivity means higher inflation. So for me, when you take a step back, the coronation of Xi Jinping as emperor means the Cold War between the US and China probably gets worse. It's already pretty bad, that Cold War, all of which leads you to lower productivity and higher structural inflation.
I don't know if I could interject, but again, thank you. Again, listening to your podcast before and just before the party congress, you sketched out the more positive and the more negative scenarios for China and what comes out of the Congress. And I know it's fairly early after, it's 2 days after it ended, or even a day after it ended. But it seems the absolute worst case scenario materialized. There is, she has centralized power to the extent that hasn't happened before Mao. I don't think there is much talk about lifting COVID-0 policies, right?
That part I'm less, okay, so go ahead. Sorry. I'm less sure on this.
So I actually wanted to ask you about the COVID-0 policies, because again, when we spoke the last time, you sketched out 3 possible scenarios: that it was a mistake and it couldn't have been taken back by Xi because he took personal responsibility over the whole thing, the chance that it was a deadly strain of the virus, and then a deliberate action. And if depending on what happens with the zero COVID policy, but if it stays, then it clearly is not considered a mistake by Xi. I don't think there is a deadly strain, so it leaves deliberate action on behalf of the Chinese government. I listened to your podcast on Thursday when with the macro voice with Eric Townsend, and he pointed out that the reason for keeping the policies could be internal politics. But is it in any way possible that China is keeping those policies to damage international economy as a way to respond? Doesn't make any sense. I'm not sure about the mechanisms in which it could work, but is it a plausible scenario?
It is a plausible. So I don't buy the whole they're doing it for internal controls, because they already have internal controls. They have like their whole social credit system. They can arrest people if and when they want. They don't need to have zero COVID to have social control. They already have that. So I don't buy that argument. The argument I do buy is that last summer, China had a massive energy crisis. Sorry, 2 summers ago, not the summer that just ended, but the previous one, the summer of 2021. China had to shut down steel mills, and they had to shut down naval shipyards and whatever else because it ran out of energy. And China's response to this was to turn around and tell all the coal miners, okay, go back to mining coal. You know, China basically tried to move away from coal to, you know, participate in the world's zero carbon fetish and everything else. And then it did an abrupt turnaround. But I think there was, so arguably you could say, well, in an inflationary world, and I'm still of a firm belief that Chinese policymakers are deeply worried about inflation. You know, zero COVID is a way to sort of keep your demand curve down for everything, starting, of course, with energy. And so if you woke up to the summer of 2021 to all of a sudden, oh my God, we have an energy crisis on our hands, zero COVID was a good way to sort of keep things down. Now, I think the energy crisis is actually has abated because China's coal production has increased dramatically, because they've restarted importing coal from Australia. You know, that was part of the contribution, of course, in 2021 was that China had decided to actually weaponize its coal imports from Australia. They were pissed off with Australia and they said, all right, we're not going to buy coal from you anymore. And then they realized, hold on, maybe that was stupid. Actually, we do need the Australian coal. So, you know, the energy situation in China is now very different than it was 12 months ago. So that's the first thing. Why I think there's no doubt that Xi Jinping has, you know, monopolized power like never before. So that's a given. But whether this also means, therefore, we stay at zero COVID forever, I think that's a logical leap. Now, granted, Xi Jinping has had a lot of power and he was in charge of COVID, and we have had zero COVID. But at the margin, it feels like things are easing up a little bit. Of course, Hong Kong is reopened, as you've probably seen. And I think that for Xi Jinping, Hong Kong is a nice little laboratory. You can try things out in Hong Kong, see if it works, and if it works, you bring it back onto the mainland. So you start off by internationalizing the renminbi in Hong Kong. It works, so we can bring that back. You internationalize the bond market. It works, so we bring that back. We try free press. It doesn't work. We shut that down. And, you know, so Hong Kong is basically reopening to foreign travel. It's opening up. So now the question is, in the coming weeks, do you start to see a surge in Hong Kong deaths? In which case, you know, you shut down the experiment, or you don't. In which case, maybe you can bring it back to China. Because the reality is Xi Jinping now has absolute power, but he's got to do something with it, right? And right now there are several issues in China. The first issue, of course, is the economic slowdown. But the second issue is that socially, you know, people are starting to get pissed off about the zero COVID. You know, the last 2 big lockdowns you had in Shenzhen and in Chengdu, you actually the government had to deploy riot police. There were riots in the streets because people were like, enough is enough. So if you start with the premise that the government is first and foremost in the game of social stability, the whole policy of dynamic clearing and sort of rolling lockouts, lockdowns, etc. It's starting to become a riskier and riskier strategy. Meanwhile, the economy continues to deteriorate. Now, on this front, I think if you're Xi Jinping, you'll probably be a bit miffed by the market's response to your party Congress. Now, you could say, well, he doesn't care about markets. And yeah, by and large, I think he doesn't care about markets. Still, nobody wants to wake up in the morning to the announcement that, okay, Xi Jinping has full power and the market falls 7%. You know, that's a bit of a slap in the face. Now, equity markets is one thing. More importantly is the currency. You know, the currency fell 1.5%. And the renminbi is now close to all-time post 2005 lows. So it's, you look at this and you think, okay, you're Xi Jinping. Do you feel comfortable with the currency falling much more from here? Now, if you think probably not, because if currency falling means higher inflation, it's also, a market sign that I'm not doing a good job, etc. Then how'd you get the currency to go up? Option one, I intervened just like the Bank of Japan did. But the Bank of Japan's intervention is not working. The Bank of Japan has just spent 50 billion and the yen is still weakening. So that's option one. Option two is I'll walk away from zero COVID. And so I guess the point I'm making is if you're Xi Jinping, ending zero COVID is an arrow in your quiver to get things back on track. Now, the question is, when do you want to use it? Well, does using it right after you get full power make sense? Perhaps. So I guess there's Xi Jinping got full power for sure. For me, that doesn't mean that China is stuck in zero COVID forever. I mean, I could be wrong, of course, but there's another alternative scenario where actually Xi Jinping needs, now that he controls everything, he actually needs to turn this ship around, and he needs to turn it around pretty quickly.
But removing zero COVID policy also would increase inflationary pressure on the world, yeah, wouldn't it?
Yeah. Oh, look, and if China gets rid of zero COVID, that's going to be inflationary for the world, because you're going to have higher demand for everywhere where you've stopped the zero COVID. You've seen 3 to 6 months of economic rebound. Everybody wants to go to bars and restaurants, and everybody says, all right, get in the car, we're going to go visit grandma. Everybody moves around. Same will be true in China. Today China is consuming 1.5 million barrels of oil less per day than it otherwise would if it wasn't for zero COVID. You get rid of zero COVID, China's oil demand goes up, let's say 1.5 million barrels per day. Where's that going to come? In a world where the oil markets are already pretty tight. Mm-hmm. So the return of Chinese demand onto the global economy. I'll give you another example. I just went through Europe, visiting clients in Germany, Switzerland, France, and hotels that used to cost me 200 euros were now 400 euros.
Yeah.
With crappier service. It's like, oh, we don't have room service anymore because we don't have enough workers, etc. What happens when Chinese tourists come back? Do you think that goes from 400 euros back to 200 euros, or from 400 to 600?
And in that context, do you think that the Chinese might weaponize removal of zero COVID policy also to inflict damage on the United States and their fight with the inflation? And the second question in that vein is, what do you think, how would you react if you were Xi Jinping to the United States' recent moves against the Chinese economy?
The move on semiconductors is a pretty, I mean, it's a violent move by the US, right? It is. You're basically telling China, you can't move up the technology ladder. You have to remain a manufacturing economy, and you can't do anything else. And we're cutting you off of the rest of the world. So if you're China, how do you respond to that? I think the first thing you have to do is try to make other friends. So you got to be friendlier with Japan, friendlier with South Korea, friendlier with Europe, and you have to try to convince them to either change the US's mind or to not go along with some of these sanctions, or to try to find, loopholes, sell ASML stuff to BVI, who then sells it on to China, or whatever else. Mm-hmm. So I think if you're Xi Jinping, you might not want to do that, but you have to go suck up to Japan, Korea, and others, while simultaneously spending fortunes of your own money to try to come up the value chain. But the obstacles there are enormous. Let's not kid ourselves that China can rebuild a semiconductor industry from scratch in 5 or 10 years. This is a multi-generational endeavor. But there isn't much choice. And in fact, I think one of the lessons from the Ukraine-Russia conflict is that you might think that you're a military superpower, and Russia, I think everybody thought Russia was a military superpower. But if you don't produce your own semiconductors, then your ability to produce weapons is severely curtailed. Right now, nobody can sell semiconductors to Russia. And so Russia's ability to replenish its stock of missiles and stock of laser guided bombs and whatever else is, that drops off pretty quickly. So I think that the lesson is, if you want to be a superpower, and there is no doubt that Xi Jinping wants China to be a superpower. He's been very vocal about this. If you want to be a superpower, you have to basically control your entire semiconductor supply chain. It's at this stage, it's almost more important than controlling your own energy supply chain, or just as important.
Yeah, but the question is whether you can be a superpower, the maritime superpower, doing what the US is doing right now, because the semiconductor ban will absolutely kill capital expenditure for those companies, right? China was a huge market for them.
Then, I don't know. The US is in the process of cutting its nose to spite its face.
Right, it's a murder-suicide, right? In a way,
it's a murder-suicide because, and again, I've already made that point, but I'll make it again. The U.S. is telling China, but a lot of countries that maybe aren't so friendly with the U.S. today, like Saudi Arabia or even in India, that you can't depend on the U.S. for anything for your supply chain, because if you depend on us, whether it be for the dollar or whether it be for semiconductors, and you don't behave exactly as we want you to, then we're going to pull the rug from under your feet and we're going to weaponize that. That's the message the US is sending today. Now, right now, I think the market's perception is, oh my God, the US is so strong. They can do this. And therefore, the only place I can invest is the US. But long term, you're sending a message to the world that the US is not a reliable partner, that basically if you disagree on anything with the US, then the US will just punish you. So therefore, why should I want to trade with the US? Like, I'm happy to sell stuff to the US, but I actually don't want to buy anything.
And Louis, this is why exactly the guy named Crow at the beginning of the 20th century, sending a letter to the Royal Crown or the Prime Minister of Great Britain, I don't remember now, the king admonished that the sea power of Great Britain cannot sanction the freedom of flows across the ocean in that manner, because there will be a balancing coalition against the power of Great Britain. Because the power that you have, if you can sanction such things, is beyond completely and beyond coping with it. So they need to react to it. Yeah.
You become a threat, basically. If you do that, kill profit margins, you're no longer welcome as a stabilizing force.
And the question is, Louis, whether you think the American State Department, the officials, the guys are really orchestrating the strategy, have thought it through properly.
I'm not sure they have. I think there's a to me, and again, I'm not in there, I don't know, but looking from the outside, it feels to me there's a certain level of hubris in the United States today, where they think, well, we control all these things, so why don't we use it? Why, we could use it, so why don't we? But if I was the CEO of Dow Chemical today, or the CEO of Caterpillar, or the CEO of any one of these big US companies, I would be looking at these developments and banging my head against the wall and thinking, you're undermining my structural business here. And I would be trying to, call my lobbyist and try to get me meetings with whoever at the State Department, whoever at the White House, whoever at the Defense Department, to plead my case and say, look, you're killing my business in China. Like, if I'm Dow Chemical, I'm not going to be able to sell. In 2 years' time, I will have normal business in China. This was a business that was growing at, however many double-digit % for me, 20 years. And you've just pulled the rug from under my feet.
Yeah, but there are such people in the American security establishment that they think it's good. That is good. Decoupling is good. That's what they think. And cutting the global supply chains because they were too vast.
Yeah.
First. And I get that. I get we need to curtail China and cut its branches. before it gets too big, etc. And that's fine, but then let's not kid ourselves that we are heading to anywhere but a world with much lower growth and much higher inflation. So if I was the president, if that was the CEO of Dow Chemical, I'd be going to the White House and say, okay, how comfortable are you with a world where inflation is 10%, for the next 5 years, 10% a year for the next 5 years, and growth is at 1%? Because that's an environment where you don't get reelected. That's for sure.
Albert, let me ask this, seminal question. But Louis, it's talking about inflation and about those things. But don't you think that directly doing it like that and undermining the Chinese prospects of doing anything in the future is a direct war to the, full-fledged confrontation structurally? What is your take on that? Let's speak about it. What is the way out? What is the way out of this tunnel, out of this spiraling confrontation technologically and stuff?
I think for China, I think China realizes full well, there's nothing to win in a direct military confrontation with the US. Because let's face it, the battle would take place on China's shores. Because the US has the Navy, if China could bring the war to the US, on the US shores, it'd be one thing, but China can't do that. So the war, if ever there was a war, it would take place on China's shores, which would de facto make China the biggest loser. Especially since, if you look at historically, China's economy was always built around its two big rivers, right? The Yellow River and the Yangtze River. Yeah. And so China's economic center of gravity was sort of spread deeply into the interior. But in the past sort of couple decades, 90% of the GDP has moved to being right along the coast, right? It's like all of China's economic activity now takes place within basically 100 miles of the sea, along this coastal band. So the last thing China can afford is war, because it'd be too easy for the US Navy to come in and just destroy, and the Air Force, and just destroy that in all of China's economic center of gravity. So China can't have a war. So what China has no choice but to do now is to A, reduce its dependency on the US as quickly as possible, and B, integrate within its backlands. So integrate with Russia, integrates with Central Asia, integrate with Africa. Those are really China's only options. If you think, okay, the sea is blocked, China has no choice but to go the other side. And I think that's what's happening today. With the Ukraine war and the sanctions the Western world has put on Russia, we've sort of delivered. We, the Western world, have delivered Russia on a platter to China. And I think you and I have discussed this before, but I think basically Russia is going to increasingly become a colony of China. Not that, I don't mean that China's going to pick the government there, but basically all of Russia's commodities are going to go to China. China's going to transform them into high value-added goods and then sell those goods back to Russia. So it'll be the same sort of economic relationship that India had with the UK for 150 years, where all the commodities went to the UK, were transformed, and then they had to, the Indians had to buy back their own cotton, but transformed for a premium. And it'll be the same story for Russia. So, if you're Xi Jinping today, you're probably thinking, I have to integrate further with Russia. I have to spend more money on building my own semiconductor supply chain. And we move to a world with really, we go back to a sort of Cold War world with different economic blocks, except this time, last time around, Kissinger's great diplomatic achievement was to separate Russia from China, right? And to bring China into the sort of the Western world. And that worked for 50 years. Now you're going to have, the other bloc being Russia and China together, and they're actually quite complementary. Everything, Russia produces everything China needs, and increasingly China produces what Russia needs, except semiconductors. But I think once China manages to crack that code, then the US's economic relevance probably goes down a lot.
Also, isn't it that I don't know if my internet is okay, if you could hear me.
Yeah.
I can better now. Yeah.
But when we speak of blocks, the problem here is, and this has been showcased over the recent weeks with Macron being pissed about the US prices of energy, everybody's super angry about Inflation Reduction Act with, preference for US companies, and Japanese getting kicked, their ass kicked, the South Koreans getting their ass kicked, not being able to produce, or rather having unfair competition in the US, and Europeans are complaining about it as well, not just Macron, but also EU officials. So it seems that the US is failing to provide an alternative, or like an arrangement that would be satisfactory for the rest of the world, Europeans included, their own allies, old allies included, right? And then there is the Fed, and
do you remember what Kissinger used to say? Kissinger used to say, it can be very dangerous to be an enemy of the United States, but it's definitely lethal to be an ally.
Yeah.
Look, the US, it does feel right now as if the US is in it. I think if you go back to the days of the Marshall Plan and the days of NATO, the early days of NATO, etc., the US was a very benevolent hegemon, right? For all my youth, there was this feeling that the US sacrificed a lot, and it was it was this really kind and generous hegemon. But let's face it, it's not the case anymore. And President Trump made that very clear. In his inauguration speech back in January 2017, his whole speech was America first. Like, whatever we do has to serve American interests. Otherwise, there's no point in us doing it. He was very clear, and he said it. And if you go back to that speech, I don't know how many times he used the word America first, but if you didn't hear the message, then clearly you weren't listening. And the U.S. today is no longer a kind hegemon. It is doing what it can. Here we are in a situation in Europe where obviously we can't get gas from Russia. The Nord Stream pipeline is being blown up. And then just last week, President Biden comes out and says, well, you know what? Maybe I'm going to block energy exports from the U.S. so that the energy price stays down in the U.S. And if you're a European ally, you're like, are you kidding me? It's like, I'm getting raked over the coals here, and you're going to pick this time to block energy exports at a time when I'm like in dire need for energy, me, your friend. Just so you can win the next election and keep the price down domestically. Come on.
You know what it means. What you're saying is that the continental consolidation, including the EU, especially France and Germany, with the support of Russia as an energy producer and maybe a dirty industry producer in the future, was a solid plan for the European elites, excluding, of course, the countries of Central and Eastern Europe who didn't want to hear about such a solution. Yeah. And the victory of the Ukraine army at Kiev battle changed the history, changed the structural forces.
Yeah, I think that's right. Now, it'll be interesting to see. I think this winter, what happens on the battlefields this winter of Ukraine is going to be key. Because, the big question mark is, as the ground freezes, do you get a big push by the Russian army or you don't? Mm-hmm. And this tells us whether the Russian army is worth anything or not, right?
After mobilization, especially.
Sorry?
Especially after the mobilization.
After the mobilization, is this army worth anything? So do we get a big push by Russia this winter that sort of cleans up a lot of Ukraine? In which case, then what happens next? Or does it show that the Russian army really was just not what we thought it was? We all thought it was this big scary bear. But by the way, if you're Europe, part of the reason you dealt with the U.S. hegemon was partly out of fear of this Russian army, right? I mean, it was this fear that what happened to Ukraine could one day happen to a Poland or even a Germany. But if the Russian army isn't what we thought it was, do we still need to live under the protection of the U.S. hegemony?
So you think that this will be the direction of the debates, and the economy will follow in that respect, and the special German economic plans to recover from this crisis will follow along those paths, or it will reconsolidate the U.S. position in Europe because of the victory of its client state in Ukraine, or sort of.
So this is, I think, look, the big problem for Europe now is Europe has already lost the Russian market, which, the U.S. losing the Russian market, they don't care. It was like rounding error. But for Europe, the Russian market was pretty important. And now the U.S. is telling Europe, by the way, you guys also have to, put an X on China. No more China. And that's, like losing Russia is one thing. Losing China is a whole other. And so if you're Germany or France or in Italy, walking away from China is tough, especially once you've already lost Russia. So then
is it fair to say it's impossible? Is it fair to say it's impossible?
It's very challenging.
Yeah.
It's very challenging. Napoleon used to say there's nothing that's impossible. Just didn't try hard enough. So, it's perhaps not impossible, but let's not kid ourselves that this is not a huge ask and a huge challenge. And so, which is why I think this Ukraine thing really matters, because if you get a big, it's actually paradoxal, right? If you get a Ukrainian victory and the Russian army is found to be nowhere, then actually Europe can say, well, you know what? Actually, I will. I don't need your U.S. protection. Thank you very much, and I'll go ahead and trade with China. But if Russia turns the tide, and with the winter does a big tank advance and takes out a bunch of Ukrainian territory, and now all of a sudden Russian tanks are at the border of Poland, then all of a sudden people in Europe start to get a lot more worried, and then they sort of have to fall in line and do whatever the U.S. tells them.
Mm-hmm. Look, in that context also, could you explain to us why how the market is reacting to all those events happening at the same time? Because it's a quite novel situation for sure over the last 30 years, and in my opinion, since the Second World War. So how do managers react? They don't have the sort of the manual how to behave in this. And of course, they move to the U.S. assets as a safe haven. But how would you explain this philosophy in a way beyond the regular understanding that everybody goes to the U.S. in times of crisis? Because this is of epic proportions. So could you philosophically tell us a little bit more about that? What is your
take? Absolutely. I think, look, there is this perception everybody moves to the U.S., but I'm actually not sure it's that true. Sure, the U.S. dollar has been strong, but you've had a massive bloodbath in the U.S. bond markets. In fact, the biggest story of the year is the bloodbath of the U.S. bond market. You've had the worst return in 100 years for U.S. Treasuries, right? So the idea that everybody's rushing into the U.S. at a time when U.S. government bonds are selling off like never before, I think there's a bit of a contradiction there, right? Now, for me, the bond sell-off makes plenty of sense. We've moved to a world that, for all intents and purposes, is now at war. It's a Cold War to a large extent, but wars are fundamentally inflationary, as we were just discussing. It leads to poor allocation of capital, lower productivity. Behind the bull market of the past 25 years in every asset price was the bull market in bonds, the structural fall in interest rates that we saw everywhere. And behind the structural fall in interest rates was the structural fall of inflation, which itself was a force of globalization, of China weighing on prices everywhere. And all that is finished. You got to throw it away. The world is now a very different place where we're going to have structurally higher inflation, structurally higher interest rates. And with higher interest rates, most asset prices readjust lower. So I think, we are seeing that in the markets. It's an ongoing process. What is interesting to me is amidst an environment of strong dollar, amidst an environment of strong, very weak bonds, tighter central banks, everybody indeed, as you point out, is of the belief that the US is the cleanest dirty shirt, right? That the US is the place to invest. But what's interesting to me is you have a lot of markets that are actually massively outperforming that nobody's talking about. Brazil, India, Indonesia, Singapore. All these markets are up for the year. Both bonds and equities are either flat or up, ballpark, for the year. When US treasuries are down 25% and US equities are down 20%. For me, there's a message there, because these, amidst the bear market, you don't expect Brazil or Indonesia to up. These are markets that tend to be quite volatile, and when things go bad, they go worse there. And I think the message is, in this new era of great power conflicts, whether Russia versus Europe, China versus US, in this new era of great power conflicts, I think the smarter investors are saying, I don't want any piece of this. I don't want a piece of this fight. I'm going to go where there is no fight, where I'm going to be safe. Now, in the old days, this meant buying Switzerland. And, Switzerland has massively outperformed over time for the very reason that it stayed out of conflicts. And today, Switzerland decided to join for whatever reason. It also nationalized the assets of the Russian central bank, and it nationalized the assets of Russian oligarchs, which it's something it had never done before. And so now the new Switzerland is Dubai. The new Switzerland is Singapore. Now, I'll give you a quick example. If you think of China, to go back to what we were talking about with the Party Congress, if you're a rich Chinese guy, chances are you don't really like Xi Jinping at this point. Xi Jinping has led a big real estate crackdown. He's led zero COVID policies that have crushed whatever business you were running. He's done a big tech crackdown. So if you're a rich guy, he's crushed your equity portfolio. So if you're a rich guy, most likely in China, you don't love Xi Jinping. So you're probably thinking, okay, with Xi Jinping now in power for the next 10, 15 years, I need to get my money out. I need to put it somewhere else. Now, in the old days, you would have bought Vancouver real estate, right? Or Melbourne real estate. The problem now is that with the Cold War, you're worried if things get worse with China, between China and the US, my money could get confiscated in Vancouver or in Australia, because that's what just happened to the Russians. So I don't want that to be me. So where'd you put your money? Well, all right. If I need to build a new factory, I'm going to build it in Vietnam. I'm going to build it in Mexico. I'm going to build it in Indonesia. I'm not going to build it in China. And if I'm going to put financial capital, I'm going to buy Singapore real estate. I'm going to buy Dubai real estate. And so that's what's happening right now in markets. So I think in this age of great power conflicts, you have two options. You can sit around and say, okay, who's going to win this great power conflict? And what do I buy to play this victory? That's hard. Alternatively, you say, and it's a bit of a bet, heads I win and tails I don't lose. Alternatively, you say, you know what? I don't want to be a part of this. These guys are nuts. They're going to take each other out. I want to be where my capital is going to be protected from this madness. And that brings you invariably to a few emerging markets that incidentally are outperforming. So the market is already telling you this is the place to be.
Yeah. I mean, if I could, because if you look at the triangle between the EU, US, and China has the most rational option would be to stay the course, continue to internationalize renminbi, right? Absolutely. I remember you speaking a while ago about them making one of the Australian companies, BHP, sell to them with renminbi, right? Which is a huge step, and they could expand on this and use this as a case study. So if they're rational and if Xi doesn't make a mistake, they could just stay the course, don't act out. The US is making all the mistakes in the world, but it's still sort of the decision how to proceed is in their hands. But Europeans, as you pointed out, are at the gates of hell. So, for example, even if the Germans would like to keep economic contact with China, they might not be able to, even if China and them wanted, because the supply routes could be blocked by the US.
Especially now that they don't have Nord Stream anymore to fall back on.
Exactly.
Right? So, and then, as you pointed out, this is again you pointing out that before the war, the EU was in position to reap the most benefit of the international situation. They had access to cheap energy, access to Chinese markets. They were ripe for continuing growth.
Yeah.
And both of those are beyond their control now. So, and then there is the dollar wrecking ball, the Fed raising interest rates. So what do you do as a European? How bad is the economic situation? How bad is it going to get? Because I think it could get worse. And what do you do to get out of it? I know that's a complicated question, but
no, it's a very important question. Look, I think the starting point has to be that economic activity is energy transfer, right? And that, to your point, I think we discussed last time, whoever has the cheapest cost of energy wins. Well, maybe doesn't win, but at least starts off ahead in the race. Now, indeed, I think a year ago, it was easy to argue that Europe was actually in a pretty sweet spot because for the first time in quite a while, it was going to get access to pretty cheap energy. Not only that, it was going to get access to energy in its own currency since Russia was increasingly open to selling natural gas for euros. So, as you thought, okay, Nord Stream 2 is going to open and it's going to pump cheap Russian gas and Europe is going to pay for this in euros, Europe is in pretty good stead. Now, of course, all of this has collapsed like a house of cards in the past year, leaving Europe in a pretty tight predicament today. Now, right now, Europe's only option, if it wants to compete, and I would say if it wants to survive, is to, in essence, tear up every rule that it has imposed on itself in terms of carbon emissions and turn back to, which is what it's doing, right? Poland has turned back to coal. Germany's turning back to coal. And coal is one of the cheapest ways to produce electricity. It's, we know how to do it. Coal is easy. We've been burning coal for 250 years. It's easy to transport. It's easy to move around. Now, you could easily tell me, yes, but that's terrible, for the long-term environment. And it's terrible for, and I'd say yes, but, so be it. The reality is that Europe hasn't left itself many options. And, I think if you're German, you should know by now that you can't fight a war on two fronts. So, you either fight a war on climate change or you fight a war against Russia, but you can't do both. And pretty clearly, Europe has decided, you know what, the war on climate change can wait. We'll pick that up. We'll pick that up later. So if you want to make a bullish case for Europe, is that we've, in essence, Europe does what it always needs to do is it imposes itself rules, and then when those rules don't work, we just tear them up and get new rules. And right now, we're tearing up every environmental. Now it probably means that we're going to get a lot more, tomato soup on paintings, and for the foreseeable future, because the whole, I would say, hardcore eco warrior wing of the Green parties is going to get more and more upset at things that unleash, and maybe we end up with eco terrorism that goes beyond just desecrating old paintings. But this is where Europe's heading, because we have no choice. Let's not kid ourselves that we have a choice. The other choice is we don't have heat this winter, we don't have electricity, and millions of people go out of work.
They finally get, all the environmental people would finally get their zero growth, right? And in real life, how it actually looks. But look,
that's what. By the way, zero carbon is zero growth. Let's not kid ourselves. This world, we've got this fascination with zero. It's like, oh, we have to have zero COVID. Oh, we have to have zero carbon. Now we're into the zero China. But let's not kid ourselves that all this means, whether you're zero China or you're zero carbon or you're zero COVID, it all brings you to the same thing, which is zero growth. And zero growth actually means a lot of deaths. During when the U.S. is in recessions, you get 30,000. You get an increase of something like 30,000 suicides. When the U.S. is in recessions, you get bumps and suicides of 30 to 40,000 in every U.S. recession. So it's all nice and good to talk about recessions, etc., but it means people dying. Like, let's not kid ourselves. It's people dying.
But also even the minor inconveniences, for the general population used to living at, pretty much post-scarcity level, I think it's not going to be acceptable. But here comes the question, because I've read the national security strategy of the US, and while it said all the platitudes about the world changing, it still didn't seem to get over the basic fact that the US power is now limited. It's not that they said they know that the world has changed, but they don't really act upon it or fully realize that, for example, their power is limited, and they have
because
to make.
They don't believe it. I think they believe when you look at their course of action, the banning of the semiconductors, the weaponizing of the US dollar, the seizure of Russian.
They still can do whatever they want.
I think they're very much of the belief that they can do whatever they want.
Yeah.
And when you talk about with them, let's say deep state people in America, and you say, well, look, Iraq was a disaster and Afghanistan was a disaster. Surely this has shown you that there's limits to the use of power. And invariably the answer is, well, it's because we didn't fully commit. If we'd fully committed, we could have sent twice as many troops and then it would have been fine. It's just like we didn't want to. We didn't really care enough.
But this means, and then I also read the Borrell speech at ambassadors conference, and he was nervous. He pointed out good things, like, for example, that deflationary pressure was not because of central banks, but rather China and globalization. But he was just being very nervous. But he also didn't see the quality of leadership that could carry the people through this difficult time. And you're French, you lived in Asia, you're now in Northern America. Do you see any sign that the leadership can handle this situation? And if not, what's the bearish case for the world?
Well, the bearish case for the world is a very simple one. And that is that we've lived for 15 years with zero interest rates. Now, to your point of leadership, zero interest rates means that you never get punished for mistakes. And this is true at the government level, and it's true at the corporate level. So we've spent really we've mistrained an entire generation of CEOs, of CFOs, of investors, and of policymakers. Because in a world where you don't have a cost of capital, you can do whatever you want whenever you want. And the costs come home back to bear like in a really long time. And now all of a sudden interest rates are shooting up. I think everybody's being found out at the same time. Money managers are being found out. CEOs and CFOs and policymakers. All of a sudden, now that you're back to having the real constraint of the cost of capital, to your point, when I think part of the hubris in the US, this belief that we can do whatever we want, there is no constraint to our power, is really saying there is no constraint to how much money we can spend. We can run whatever budget deficits we want, etc. But increasingly, they are finding out that this isn't the case. The UK just had the wake-up call of actually this isn't the case. You know what? You can't do whatever you want. Now, the US hasn't had that wake-up call moment. But I don't think it's very far off. You get another 50, 100 basis points rise in long-term interest rates, and all of a sudden, what you're going to see isn't as much the federal government going bust. What you're going to see is municipalities going bust. You're going to see states going bust, whether it be California, Illinois. And all of a sudden, you'll be in crisis mode very quickly.
And do you think that's a more likely scenario, just to wrap up, more likely scenario than the bullish case?
I think the more likely scenario in the near term, when you look at the amount of capital destruction that has occurred in the past 12 months, both on the equity and the fixed income side, for me, what people aren't thinking about is that there's somebody on the other side, somebody who's lost a lot of money, and that somebody more often than not is big pension funds. And again, we just saw it in the UK. We with pension funds putting their flag up and saying we're about to go bankrupt.
Yeah.
Imagine you start to see the same thing in the US. Well, what happens in the US is a lot of these pension funds are actually state run. So let's say, a big state pension fund in California or in Illinois or in Missouri, for the sake of argument, then they start basically being too underfunded and going bust, they then have to turn to their local government. So let's say Sacramento in California's case and saying, hey, we need a $10 billion injection. We need a $12 billion injection. And then the state has two choices. Option one, raise taxes, which is very hard to do amidst an economic slowdown. Option two, borrow money to give to the pension fund. Now, borrow money means issuing debt. What if the market says, you know what, I don't want this debt? Then very quickly, you're in a situation not that dissimilar to what you had in Europe in 2011, 2012, when the market said, I don't want any more Greek debt. I don't want any more Italian debt. I already have too much. I think we could be very soon in a situation where the market says, I don't want any more California debt. I don't want any more Illinois debt. Thank you very much. I have too much. And then all of a sudden, that gets punted back onto the federal government and onto the Federal Reserve. Then the Federal Reserve has to decide, okay, fine, I'll buy this debt. But by then, I think the view and the perception that the U.S. is this clean as dirty shirt, and that the only place you can be is the U.S., that shifts dramatically.
And then the U.S. is the cleaner shirt that what's happening in Europe with bond yields, right? Which Poland has over 9%, I think now, 9%. The UK is injecting all this money, so it's even worse over here, right? At the end of the day.
Yeah, and then you start looking around and saying, okay, which countries have not been managed ridiculously? And it turns out that it's all the countries that did not have zero interest rates. It's the Indonesias of this world, the Brazils, the South Africa, because they didn't have the option of doing really stupid things because they never had free money to begin with.
Okay, this hour has run out too quickly, and we still have
Always does.
thousands of questions, and maybe next time around. Louis, thank you. Our guest.
Good luck this winter.
Yeah,
Get plenty of firewood.
Yeah, Louis Vincent Gave, Albert Świdziński, and Jacek Bartosiak, and thank you. Stay with us at Strategy and Future. Thank you, Louis.
Thank you very much. Bye, guys.
Take care.